G'day traders, Chris Weston, Head of Research at Pepperstone here. It's been an interesting day. Certainly when we came in, first of all, we looked very closely at what was happening in the S&P. There's a really important setup that I've been watching very closely. If you look at the lows there today, we got down to 26.85. We filled the October gap. Price bounced off that level, and price obviously gaps are there to be filled. But the fact is, yeah, we could go back to test those levels. If you look at price, it's still trading within this bearish channel pattern, and price rallies are contained into the 5-day exponential moving average. And until price can close back above that exponential moving average, I'm still taking a fairly cautious tone on this market, especially with the volatility index, the VIX, trading above 20%. It shows that we can have some fairly whippy moves, agnostic moves and directional agnostic at any stage. So I think, to me, I'm going to be looking to play this by, if we get a break of 26.85, I personally think that we're going to see a heightened chance that we could go down to test the figure at 2600. 2600 in itself is a massive level because that's the neckline of the double top that we saw recently as well. So I think if you get a break of 2600, yeah, we could be looking at 2400 as your technical target on that double top neckline. So definitely something we are watching. If you look at momentum indicators, you know, they are heading lower at the moment. So I think a break of 26.85, I want to be short the S&P. Of course, that's going to be thematic of what we're going to be seeing across the Dow, the Nasdaq, and then obviously other markets as well, equity markets around the world. So I think that level of 26.85 is key. If we get a break of that, you know, we want to be trading global equity markets from the short side. So definitely was something we're watching there as well. In terms of when we came into Asia today, of course, we focused very much on what was happening in Brexit. We know we've got the deal through. Theresa May has managed, after a 5-hour meeting, managed to get that through her cabinet. There hasn't been any resignations so far. There had been some rumours that we were going to see some resignations. That hasn't been the case. And we have seen a bit of a pop in sterling up into 130.70, but traders through Asia have been sellers there. And I think the interesting point is, if we have a look at the optionality market, if we have a look at 1 week implied volatility in cable, yeah, it's dropped a touch, but that's fine. That's got the deal out the way. We know that there's a repricing of expectations because that deal has happened. I think you really need to have a look at 3-month implied volatility in cable to understand how people feel about this event, the agreement actually giving us a better chance to see this being voted through the Commons, which of course is the big deal here. Does she have the math to be able to push this through? And implied volatility in a 3-month cable hasn't really moved. It's still very, very elevated. In fact, if you get the implied volatility in cable and adapt that through the Black-Scholes formula to give us a straddle, the market is pricing a 620-point move over the next 3 months in either side. It is positional and directional agnostic. Therefore, you could see a big move. The market is saying to ourselves, fine, we've got the deal out of the way, but we're still not convinced this is going to have any greater chance of passing the Commons, and therefore a volatility event in the pound is still very true. We can have a look at risk reversals. In fact, there's been a higher bid, and the skew towards put optionality has increased relative to call. So people today, despite the deal, have put on bets that we could see greater downside and buying those deep out of the money puts and the volatility there as well. So definitely something we've seen. People are not convinced that this deal is going to get through Parliament in any shape or form, and that's something we're watching. We've also seen the Aussie employment numbers today. They've been very, very strong. I've given it an 8.5 out of 10. The participation rate has increased, yet the unemployment rate has stayed at 5%. The market had expected that at 5.1%. The level of net job creation was well above what the market was looking for. The level of full-time jobs was very strong as well. So we've given this a good thumbs up in terms of how this has gone. It marries nicely with yesterday's wage growth in Australia. The Aussie dollar has been the best performer in G10 today. That's pushed up to the high 72 cents levels. Big move up against the Kiwi as well, which is something that I've been fairly bearish on. Will it break through the figure? That's something we're watching today, whether people look to trade that. But we're also seeing a decent move in the front end of the Aussie bond market. There's been a higher degree of rate hikes being priced in. We're looking for about 81% probability of a rate hike by the end of next year. But there's been a 5 basis point move in the 3-year Aussie government bond, which is a decent move compared to what we're seeing in Asia. So really a lot of people have been putting on some shorts. They've been closing out some of those longs in the Treasury market. That's put upside into the Aussie dollar today. So definitely something we're watching. If you're trading the Aussie dollar, the levels you need to be watching is that high 70 or the low 73 cent level. We've got a lot of horizontal resistance around there. So I think if you can get a close above 73.15 specifically, you know it's on. I think we look then to the 38.2% retracement of the January sell-off coming around 74.50. I think that's a key level that we'll be watching as well. The oil traders today have been fading the move. Obviously, we saw a decent shorts close out yesterday with the US crude price going up 1%. Given how oversold that was, it wasn't particularly convincing, but we did see the API coming out of their inventory numbers this morning at 8:30 Eastern Daylight Time. Yeah, huge build, just above 8 million barrels. How does that play into tonight's official Department of Energy inventory numbers? Well, of course, the market looking for 2.9 million barrels there. One suspects we're going into this expecting a higher inventory number. Given everything we're seeing with lower demand, higher supply, that's not going to be a good situation for those people who are buying into oil, and the likelihood is we'll probably see that moving lower again, which isn't going to be great for inflation expectations in the bond market as well. We've seen the Fed chair coming out today, Jerome Powell. That's been an interesting discussion. He has talked about the neutral rate being used as a risk management tool. He's been talking up the US economy, saying it's very strong and the US dollar is a reflection of that. He's been talking about all meetings being live now. We're going to have a press conference at every meeting. That's going to be very interesting, although certainly fatiguing for people. And we go into the December meeting with an 81% chance of a rate hike. That said, if we listen to everything Mr. Powell has said today, there's nothing new that we take out of it. They're still looking for gradual rate hikes. It does worry me that he hasn't acknowledged to a great extent what's happening in the housing market, what's happening in autos. And certainly we saw that in the mortgage numbers yesterday in the US. They're down 3.2%. So definitely we are seeing a little bit of heat coming out of the US dollar, but it's by no means rolling over at this point, and certainly gold's fairly flat on the session today. Bitcoin's been heavily traded from clients. That's broken through some key levels. In fact, the whole crypto space has really come alive with the sound of volatility. And that's something we're watching because, if you look at Bitcoin, the break of the horizontal support levels, suggests this needs to be traded from the short side, in my opinion. I think there's further downside in Bitcoin. I'm not holding a position myself, but if I was, I'd certainly be trading this from the short side as we go on. So a lot to look out for, whether it's Mr. Powell speaking, Brexit resolution to a shorter extent, really strong Aussie numbers, fairly flat moves in Australian and Asian equity markets, and something to look out for as we go on. Certainly from the S&P, that's a market I'm looking at very closely there.